Welcome to this Diwali special on the India Development Debate. I'm Tamanna Inamdar. As we get ready for the new year and a new hope of a better time after what has truly been a trying and terrible 18 to 20 months, it's important to take stock of what we've been through and where we stand. Today on this show, I'm happy to be in studio with all of my speakers together in this very festive mode, and we want to invite our viewers also to participate in what we're all experiencing now. I don't think it's much of an exaggeration to say that truly this time is where all of us are feeling some optimism after a very, very tough period. Whether it is a lockdown which shook us all up, or a devastating second wave which turned into personal tragedies for many of us. Lives were disrupted, businesses were hit. But like this Festival of Lights always teaches us, it is time for some new optimism and hope with a clear understanding of where we stand, not just blind optimism and hope. So helping us recount what this year has been like, what the next year looks like for business, trade, for retail, for the economy, I'm joined today by a very special panel of speakers. In studio, Kumar Rajagopalan of Retail Association of India with us today. Anurag Katriar, Trustee with NRAI, that's the Restaurant Association, also with us today. And I have Madan Sabnavis, Chief Economist at CARE, with us today. Great to have all of you in person after Zoom conversations for close to 18 months. So good to see all of you all. And of course, wishing all of you and our viewers a very happy festive season. Let's just start it off by talking about where we are. And Mr. Rajagopalan, if you'd like to go first. I keep seeing the regular updates that Retail Association of India puts out. And one thing I noticed is that your latest one, for the first time in all of these months, said that we're almost at pre-pandemic levels of sale.
Correct.
So we have seen a big up move, isn't it?
Yes, it is, and my wishes to all the viewers, my wishes to you, and thank you for calling us to the studio. It does feel special because all of us are sitting together, able to speak with each other in person. The feeling has been the same. The business, of course, in the month of September was showing at about 94% of the pre-pandemic level. Not 100%, 94. Having said that, it's definitely way, way ahead of what it used to be. We were hovering around the 60s and the 70s and the 80s. We had not seen a 94% kind of a business for whatever time. So it's, and when I said 94 pre-pandemic, I'm comparing our data with 2019 data. So that looked good. But more importantly, I think there are some categories which were actually the laggards for us. So if you typically look at garments, if you look at jewelry, if you look at eating out, if you look at footwear, all these were segments that were really the laggards. It was not really performing well at all for all through the pandemic. And now we are seeing some nice hopes even in these particular categories, which means that people are now willing to socialize, they are attending functions, there are new requirements for them to go back to some offices. So that's the good news for all of us, I guess. And yeah, that's where we are. So in the current circumstances, I'd say it's a welcome thing for all of us. All of us know as individuals also, I call this as the return of the cheer.
Oh.
So it is shopping with the sense of cheer. People are coming out. People are otherwise been sitting at home and only buying things online.
Yeah.
So it's a new
So revenge travel, revenge shopping, revenge eating, that whole feeling of you only live once. We don't know what's going to happen next. So while we have that opportunity, let's go out and enjoy. Anurag,
Tavanna, just 1 second.
Yeah.
I'd like to call it the cheer shopping again. I'll not like to call it revenge.
Revenge.
I don't know whom you are taking revenge against.
all of those months locked at home.
Yeah, I mean that's there, but I mean specifically I call it cheer now because I think that sense of feeling good is come back into people, and revenge has a slightly negative connotation to it.
Yeah.
I'd love it to be that people enjoy themselves now.
Yeah, no, of course. Anurag, for I think the restaurant business, it's been particularly tough because this is the service industry at the end of the day. And yes, technologically, I think even those who weren't on apps like Swiggy, Zomato had to move on.
Absolutely. Yeah.
Otherwise, you wouldn't survive.
Right.
Perhaps those online sales have gone up in volume, but value-wise weren't making the cut.
No.
Are you back where you would hope to be, or is this going to be a long climb out of this post-pandemic situation?
Let me begin by saying we are in far more comfortable position than where we were, say, 6 months ago. But I wouldn't say we are anywhere close to being normal. And I say that for a reason, because restaurants are still operating with 50% efficiency across the country. It cannot be normal. But there is obviously, I mean, with 50% capacity, if you are operating at about 70, 75, 80% of your overall business pre-pandemic, I think you're doing very well. At least there is crowd in the restaurant. People are back at the restaurant. And that's what, as restaurateurs, we all cheer about. Size-wise, I mean, just to give you an idea, we just released last week our COVID impact report. The size of the industry has shrunk 53% from 19 to now. So obviously, I mean, that kind of thing will take a long to come back.
When you say size of the industry, you mean sale volumes,
Sales
footfall?
volume. Sales
53%, huh?
From 4,23,000 crores in 2019, we dropped to little under 2 lakh crores last year. And that's where you are. 25% of the restaurants have shut down permanently in the country.
Yeah.
So there has been lots of fatalities, bad news. Good thing is that there is a newfound, enthusiasm amongst the people. They want to come out, they want to dine out, and that's good to see. Now, once these restrictions are lifted, I'm sure we'll hit better numbers than what we were doing earlier.
Yeah.
And it's for us also is about the human tragedy. For the number of people we employ, as per our report, 2.4 million people have lost their jobs permanently right now. That's a lot of people. So while we want people to be back, that keeps us happy. We want all these indices to improve,
yes,
so that everything comes to a good thing. But overall, great time. People are coming back to the restaurant, and finally restaurants are open for both lunch and dinner.
You know, that's a very important point you make, and Madan, it brings me to what I'm coming to you with. There is a dichotomy as we look at this festive season and we're celebrating. Of course, people are spending more money because there are some people for whom the pandemic has economically been very good. Stock markets have been great, people have gotten into cryptocurrencies, people are buying houses at record levels, and then there is a whole bunch of people who have sort of dropped off the map. People in the restaurant business, for example, who lost their jobs, others who have lost their jobs and had to deal with a new reality. What is happening with them? Is this now sort of a widening gap?
Yeah, I think that's a good question, and we should remember one thing, that the pandemic has affected people in a different manner, whether you're in manufacturing, whether you're in services, and as has been mentioned, I think lots of people have lost jobs permanently. So I do see that there has been an increase in inequality. So what we are seeing today is definitely a case of a lot of spending, but it's necessary to know as to who are the ones who are the big spenders. Not to say that the people at lower income groups are not spending. I think there is a case of pent-up demand, something which was not satiated last year. And definitely people are going out today. So there is going to be a large amount of spending coming through. But one concern which we as economists have is actually what's happening to the rural demand. Because I think this has been one factor which was something which didn't materialize even before the pandemic set in. And this time we have seen that during the second lockdown, I think that's a time when the rural economy was affected more. In fact, last year, I don't think the rural economy really got affected by the
It was
pandemic.
what was propping us up.
It was propping us up.
Yeah.
And but now there's a case of saying that almost everybody in the rural setup also had somebody who was infected. There's been more money which has been spent on healthcare. And even though we do expect incomes to be fairly stable this year because the agricultural harvest is expected to be good, is there going to be the willingness to spend? So definitely there will be some amount of spending which takes place. But will we see this kind of a pent-up demand, large-scale demand coming up, people spending in a big way? I think that's something which we have to wait and see whether it will be, whether this kind of thing really takes place. But otherwise, if we're looking at the urban centers, we're looking at the higher income groups, I think lots of people have not had an opportunity to spend. And the fact that services sector has been largely closed because this is where you cannot maintain social distancing. So it's always been the last part of the program of the government to open up the services. And even today, it's not 100% open. So definitely we're seeing the services, like you're talking of retail, you're talking of hotels and restaurants. I think everybody's doing well right now. So we need to see if this can be maintained for the next 3 months or so. So as economists, we normally say that if we see this kind of a boom lasting for 3 successive months, then we have actually turned around the corner. But I do remember that even in around January, February, we felt that the services sector in particular had probably reached around 50 to 60% of the normal.
Yeah.
And then suddenly it crashed.
Post first wave.
First
Yeah,
wave.
yeah.
And today now we don't know, yes, things are looking very good and there's no
Yeah.
reason for us to be doubtful this time,
Right.
because we've had a good successful vaccination program. And even in case we have a third wave, I think we're better prepared both in terms of the government as well as in terms of business to handle it. So I think it does look stable, but in terms of inequality, yes, this is definitely a concern which is there, because everybody has gotten affected, and I'm not quite sure if the people at the low level have managed to come back to where
So
they were.
will it all trickle down then is the question. And just as a side note, Q3 is traditionally a good quarter for the Indian economy. It's an important one for a lot of businesses, especially in the services space. This is an important quarter. That's when, you know, a huge proportion of annual income also comes in. My question is, will this now trickle down? If people are willing to buy larger televisions, bigger homes, those who can afford to spend more, somewhere or the other it is going to increase employment, or is it going to take too long? Madan?
No, absolutely. It will. There are very strong backward linkages. So, in fact, why is it that we, as economists, we emphasize on spending? Because finally, everything has to be consumed,
Yeah.
and as consumption increases, automatically there are backward linkages to the entire production processes, and therefore we see a very virtuous chain reaction, which leads to a boom in the other industries. This holds not just for manufacturing, but also for services.
And we are a consumption-driven economy. This was the last piece of the puzzle.
So exactly. So it's all a case of saying, are we creating enough jobs? Do people have enough money? So actually, if people are spending more, it means jobs are also being created. Because today there's always a controversy over whether jobs have been created or not. We'll actually get to know if people are spending money this time. It means that yes, there are more people who are employed.
So
and they
let's
have more
see
money.
it anecdotally, right? Anurag, the last time we were speaking, you said that you have started hiring back more people.
Yes.
And are the new hires, most of them at higher pay? Do you have to sort of run after talent? In very niche sectors, people are running after talent, right? So that's software IT, that's a different genre. But is the average pay scale up or below pre-pandemic levels?
No, they're pretty much at the levels of pre-pandemic. And in certain cases, which are like, I call them bargainable category, where the availability is far more, it's in fact maybe a trifle lower than where it was in 19. And in certain very key skilled positions, like a great chef or somebody, it may be a trifle higher. But there is no significant change in the cost of hiring, so to say, or the cost of people from 19 to now.
Volumes? In terms of numbers, are you back at pre-pandemic strength?
Nowhere close to that.
Yeah.
If I talk about my own company,
Yeah.
I used to have close to 1,000 people working for me. Today, because my size has shrunk so much, I'm operating with probably 150.
Oh, wow.
And that's not because I'm working with lesser people. I have lesser number of outlets to run.
Yeah.
That's where the numbers drop.
And we're talking about a major restaurant here. So let's go down the line and see what's happening to smaller
Yes.
outfits. So yeah, it's looking good, no doubt, but we have a way to go.
Yeah.
That same question to you, Mr. Rajagopalan. Overview in the retail business. Are employment numbers back to pre-pandemic, inching there? I mean, are you hiring that many people? Because retail is a huge employment generator. Yes. Are you hiring as many people, or because a lot of sales are moving online, so you don't need so many people?
So the numbers look like this. Pre-pandemic, our estimate was that there are about 45 million people working in retail. Now that come down by about 5 million people in the thick of the pandemic. It actually had shrunk by 5 million people. Now we hear that almost 3 million people are back, but still there are 2 million people not in the job yet. Multiple reasons there. One part of it is, of course, that some are not able to get their jobs back because the business itself is changed in the last 1.5 years. The entire retail methodologies have changed, efficiencies have changed. But the other parts is also that some people have actually, they were not living from in the city where they worked, and they went back as immigrants. Many of them did not want to come back. Now we are still trying to find out what the reasons could be. In some places, I think they were also accustomed to going back to their places, being with their loved ones. They are still not sure when they come back whether they'll have to once more land up into a situation where they will not be able to have a job. Because if you are in a different city and you don't have a job, or you don't have a consistent job, then you can't afford it, especially in the metros.
Yeah.
So they are very wary of coming back and taking their jobs back. Our expectation is if this runs on for some more time, maybe a significant part of them would come back by December and January. We'll have to wait and watch.
So we basically need this quarter to stabilize the trends we're
Absolutely,
seeing.
absolutely.
Madan, you wanted to come
Yeah,
in?
in fact, our surveys showed that if you look at the SME segment, I think they have lost a large amount of jobs. And most of the SMEs, I'm talking now of the manufacturing sector, they are not yet back in operation. So I think when we're talking in terms of the ability to spend, ability to create jobs, I think a lot depends upon what happens to the SMEs. And we have seen that people who have migrated to their villages, they're reluctant to come back. That's one. And second, also, quite often the business has not yet come back on its feet, and therefore the demand for labor is also there. So I think this is something which has to be fixed in the coming months. I'm quite sure it will be done once in case we don't have a third wave and this virtuous chain reaction starts.
Okay, so let me just look back to, say, last year this time, right? Last pre-Diwali. What were the big hiccups? We still didn't know at that time we were going to have a terrible second wave. But one of the hiccups was, will India have enough vaccines? Will we be able to vaccinate such a large population? Absolutely. We are over most of that hump. Not all of it. We still have 20, 30 crore adults who are not vaccinated yet. They need to be. We're still better on that hump. The other one was, will consumers return? Because it's a consumption-driven economy. It seems like that's happening. So 2 out of 3 there. Let me come to number 3, which is the big bugbear right now as we look forward, which is input cost pressures. Mr. Rajagopalan, things are getting expensive. Things are getting expensive. I'm not even going to go on the whole petrol diesel rant. I think I've been talking about it since it was 80 rupees a litre. It's now 120. I think it's, I don't know what's going to happen, but it's just something which we're living with. Right now, you're not seeing high costs being passed on fully. Do you expect that to happen?
It's very possible. And I'd not like to shoo aside the petrol cost because that still got a big impact. For some sectors, it's also quite evident because at the end of the day, it impacts somebody in some form or the other. It's either logistics or it's part of the input cost.
No, I'm not showing it away. I'm just saying that we've been talking about it, but it just keeps
keeping
increasing.
that still on top because it's still a worry. So I know that you've been kind of talking about it, and I'd like to reiterate that it's still a problem. We can't run away from it. But having said that, some of the input costs, like for example in the garment sector, the cost of cotton has gone up by 40%, cost of linen gone up by 60%. Now it has to result into a cost.
So you're saying these have not been passed on?
These have still not been fully passed on, and in some cases it's been passed on with those who are very closer to the cycle. But otherwise, it's a 3-month cycle, so it does take time, but it will get passed on. Bigger worries are also yet to come. For example, in the garment sector, we are expecting that the GST rates would become, from January, GST rates would become from 5% to 12%. At least that's been the announcement so far. For those which are less than 1,000 rupees, significant part of the items that sold in this country are still less than 1,000 rupees when it comes to garments, the mass market. Now, if that goes up from 5 to 12%, you're going to impact the set of people who should not be impacted with costs at all. So we've got these kinds of issues that's coming up. There is also supply chain issues in various parts for various sectors. In the electronics, we know there is all kinds of chips issues, and there is an issue of ability to bring in some imported items, stuff like that. In some sectors, there has been some worry about the ability to smoothly import items, those especially who had some input items coming in from China. And China is a big manufacturer for various components, and that has an impact. So I think there are various impacts at various places for various people. In the toys sector, there is issues. In the garments, there are issues. In the components of some kinds of accessories, there are issues. For example, bags for women. It has all kinds of needs and pieces that needs to be brought in. Again, there are issues. And it's not as if India can overnight become this mass manufacturer who will do things wonderfully. So it's not been simple.
Yeah. We have Mayank Shah with us from Parle, who's joined the party. Mayank, you're late to the party, but welcome all the same. Let me fill you in. We've been talking about what the last year has looked like, what we're hoping for the new year as we enter into the festive season. And at this point in the conversation, we're forward looking to what the demand has been like and what impact input costs will have. Would you like to come in with your perspective?
Yeah, sure. So if we look at the last 1 year, the demand has been robust, and we see robust demand continuing. In fact, the biggest challenge ahead of almost all manufacturers and marketeers today is how to contain inflation. It's not about the demand thing. Demand is there, and there's good demand out there. The growth rate for most categories that we are talking about has been good. The demand has been good. It's about how to manage your cost, how to take care of inflation, and as we were just discussing, I think that's a problem across, not just in one or two categories, including but not limited to foods. So if we talk about food and if we talk about the basic commodities, food commodities like wheat flour or edible oil or sugar, they have been going up. Oil, in fact, edible oil I'm talking about has been almost gone up by 80% compared to the same period last year. Sugar of late has started going up because of the Brazil crop issue, and because of MSP, even the wheat flour cost or wheat cost has gone up. Given that, I think a big challenge ahead of almost all uh, processed food manufacturers or food companies is how to manage inflation or how to maintain your cost. So I think it's more about maintaining the cost, because nobody would like to right now uh, increase the price. It's not that they are not doing it. There already was one round of price hike that happened about 2-3 months back,
So how
and
are you managing it,
probably
Mayank? Are the biscuits getting tinier and tinier? Is that
no,
what we're seeing?
they won't get tinier. I think there would be increase in. So maybe in the smaller SKUs, you may find less number of biscuits, but in bigger SKUs, you will see the increase in MRP. I'm talking about more than 25-30 rupees MRP biscuits packets SKUs. There you will see increase in MRP,
Yeah.
and that's what is happening. So there was already one round of price hike that happened about 3-4 months back, and if this kind of uh, costs or rather prices of key raw material, if they continue, then we expect there would be one more round of price hike happening anytime post Diwali.
Wow. Just another follow up to Mayank, and this is a part of the conversation you may not have heard, but Madan was mentioning earlier how rural demand is becoming a bit of a concern. Are you seeing that as well?
Rural demand is not really a concern for us as of now, because it has tapered a bit, but it's still growing. So, probably from about 12 to 14% growth that rural saw last year, it has come down to about, 10-12%. So it has tapered, but it still is growing. In fact, Canton number or household numbers were just out. Even they are pointing towards the same direction, where it has slowed down a little bit, but it has not, gone down dramatically. But as we all know, rural was not really as affected as urban, and hence, you cannot expect probably the kind of growth that we saw last year in rural demand to continue. So it has tapered a little bit. However, what has happened in last few months is that urban demand has, gone up, and that has taken care of the total growth. So, urban demand, which was affected during the second wave because of limited market hours, or for the limited hours for which shops were open, I think that has started going up. So today, in fact, urban demand is higher than that of rural demand, and because of that, if you look at the total growth rate, that somehow has maintained.
Just on the input cost side, and Anurag, let me come to you and just understand what is happening in the hospitality and food business. I know commercial LPG cylinder prices have just gone up, so that's another ouch factor.
Yes.
But right now, restaurants are full, and I admit I don't have an overall view. I don't have any data to back this. This is just anecdotal. You try and get a booking in a big city on a weekend, it's difficult. But people are willing to spend more.
No, people are a little more careful about the money. And as you said, yeah, weekends are definitely much fuller than what it is. But fortunately or unfortunately, there are 7 days in a week.
No,
Maybe
and,
they'll
and
do them.
again, with the caveat that this is not reflective of the entire country. This
Exactly.
is just some pockets, just some categories.
But on the input cost perspective, our bigger problem is something else. That's where government has to probably come in. We don't get any input tax credit on our GST. So every penny of GST that I pay on purchase of goods, services, anything, is an added expense on us. And now with the volumes dripping and generally the proportion of fixed cost in our business being high, this is backbreaking. There is, like you talked about gas, there is a huge chance the poultry cost may go up because the feed cost is going up across the board. Now, if that happens, I mean, how much can you absorb? But if the government allows the input tax credit on GST, it will probably allow us a little bit of a breathing space. And I think it's high time that the government probably has to look at it. That will probably soften this whole blow of input cost going up.
How concerned are you about the very well-rounded increase in costs, Madan? And to be fair, this is not an Indian phenomenon. We are seeing this around the world. Various economies, I think the United States is going to hit its worst inflation in years, and they don't know what to do with it because they're just not used to it. At least we're used to महंगाई. So do you see this as a massive concern, or will India be better placed to ride it out?
No, I think we should look at it this way, that there's been a global commodity boom this year. So especially if you look at metal prices have shot up. So I think producers of metals, anything related to steel, copper, they're doing very well. They're very happy of the fact that the prices have gone up. However, we're looking at things like edible oils, we're looking at other agricultural products. Yes, the prices have gone up. This is not something which is good because they go in basically as inputs for other products which are being produced. But I think the good part is that if you look at the IMF and the World Bank forecasts about commodity prices, they do expect prices to even out in 2022.
Okay.
So the kind of boom which we have seen today will not be something which will be witnessed, at least on the non-agricultural side. Crude oil also, I think surprisingly, the World Bank is talking of the numbers coming back into the 70s. Though given the kind of a warped tax structure we have in India, I'm quite doubtful whether the government will actually be willing to lower the price of petrol and diesel to less than 100. Now all of us are used to 110, 115, so they'll say, okay, we'll continue with 115 and the fiscal numbers can look better on account of that. But definitely inflation is a major concern for us because today even when we're talking of hospitality, we're talking of retail, I think the ability to spend comes down because of higher inflation. And today if you look at the CPI inflation, we say, okay, food inflation is down. But I think lots of us don't believe it when we pay 50 rupees for onions or 50 rupees for tomatoes. Notwithstanding that, if you look at what we call core inflation, I think that's running at around 6 to 7%, and it's been so for the last 18 months. So I think prices have gone up, and at some point of time it will hurt. Our ability or willingness to spend will come down.
It probably is already hurting because we're talking about inflation and high prices in the context of business. But in a country like India, it impacts nutrition very, very quickly. So that is a major concern we have to look at.
And what we were talking of, the inequality, the higher incomes, okay, maybe I can afford to pay additional amount in the restaurant for my food. But people who go to the lower level restaurants, I think if they're coming from the lower income groups, if your idli or your dosa goes up by 10 rupees, it does hurt.
Yeah, absolutely. Okay, so now let's look forward. We've got a reality check. We're better placed than where we were 6 months ago. There is no doubt about that. Even the most conservatively optimist person will agree. We're definitely glass half full right now. Have we reached our full potential? Are there no threats on the horizon? No, that's not the case. So let's look forward. And what do we see for the next year in terms of a prediction on how we will grow, where the trends will move? Mayank, you want to start first?
Yeah, sure. So, taking ahead the discussion from where, you just talked about the demand in the coming time. And as I shared that we are expecting demand to be robust. What is adding is the newfound confidence of consumers post, the kind of vaccination that we have seen and the numbers of vaccination, 100 crore plus. So people are going out. And what we are also expecting going forward is demand will continue to be robust. There is some sort of, revenge buying that's also happening and that will continue. I think there's also a shift in mentality. That's what we are seeing on the consumer front, where consumers are looking at living, for the day rather than saving for the rainy day. I mean, that has been, typical Indian mentality. If you would have seen the saving rates, that we were used to prior to COVID, I think people today want to go out and spend. Having stayed in, house for almost about 1.5 year during the pandemic, be it hospitality sector, be it, going and buying out luxury products, or be it going out and buying food products. I think they are going out or eating out. I think, they are going out and spending. And we are seeing, consumers not really trying to save, but they're going out and spending. And I think there's some sort of revenge buying, as I shared earlier, that's happening. And that makes us believe that going forward, at least for next, 6 months to 1 year, we'll continue seeing robust demand.
Dropping savings rate is the stuff that Madan's nightmares are made of. Where if Indians' propensity to save is what has held us through, I think, some of the biggest economic crises in the world, 2008, 2009 as well. But yes, you're right, that feeling of have fun today, we don't know what's around the corner is definitely there. Mr. Rajagopalan, you think it will sustain?
I don't know. I'm keeping fingers crossed.
Yeah.
The way I look at it is that retail's gone through some really tough times. They were kind of being swept away by the river. Now there is this log that's possibly capable of getting them to the other side. However, there is still a rushing, gushing river below. And if they can really cross that, it's fine. I mean, on a slightly pictorial basis. Because there's a lot of outstanding payments to be made. For example, many of the retailers have to pay their vendors much in advance now than they ever had to. So the average credit time has come down to about 30 days if they are lucky, from a normal 90 days cycle, okay, for many of the sectors. Similarly, in terms of input cost, we've already discussed what's happening. We are seeing that customers are coming in. Thankfully, the interest rates are lower. There is some amount of consumer credit also that's happening for as a sweetener, and we are seeing lots more UPI-led transactions and various other transactions happening. So those are good things that's happening, I think, for retail. We'll have to wait and watch. I will not be very, very optimistic to an extent wherein I'll say let's not worry about the other parts. I'd be cautiously optimistic. But if there is no epidemic of some kind, I'm sure people can work with each other to make things happen. There's a lot more collaboration, huge amount of efficiencies that's come in this period. I mean, the other side of what's happened is actually retailers and many businesses have learned how to use digital to increase their efficiencies. And that's beautiful. If you ask any of the people who are into business of direct to consumers, their ticket sizes per consumer has gone up. Because when a customer do come into the stores, they come in and buy lots more. So although the walk-ins in many of the places are about 60 to 70%, the business is at about 88%, 100%. So that's a beauty that's happening now, and we think that if that continues, because people are learning more, they are indulging more, they are communicating more, some could do very well, but there could be some would be swept away.
Yeah. So survival of the fittest is what we are seeing. Anurag, you're hoping that more get fitter and more survive?
Oh yes, I'm fairly optimistic from that perspective, and I say that for a few reasons. Number one, if you look at the trends of last 4 or 5 months, there is an upward tick. One of the most surprising thing was the month of September, which is traditionally a very poor month for us. It wasn't as poor. I'm not saying it was like a bumper month. It wasn't as poor as it traditionally used to be. Number two, I think with the vaccination drive going where it is going, I think lots and lots more people will come out to the markets. They will consume more. And I feel with the time going by, we will have relaxation on the seating norms and other COVID-related protocols. In fact, if you ask me, I think we should become a 24/7 economy.
Yeah.
That's one of the best ways to deal with it. And these are the reasons why I feel I'm very optimistic going forward. Third quarter, as you rightly said, is the best quarter for us. The Christmas, New Year's for F&B is like the bumper time. And I hope that will work as a catalyst to permanently ignite the consumption going forward.
Yeah.
So yes, I am very hopeful and very optimistic.
Madan, your outlook.
See, Anurag is a businessman, so he has to be optimistic. I'm an economist, so we normally try and raise various kinds of red flags.
Yeah,
That's
you're
on
the
lighter note.
counterbalance on the couch.
Exactly. No, but actually, but seriously speaking, if we, all the good news which we are talking of, the good interpretation which we are drawing from what's happening, we're all saying that we're going to a certain level of 2019-20. Now, 2019-20 itself wasn't a great year.
Yes,
we had a
that's
4%
true.
growth rate. So, in fact, even at the macro numbers, when we say, like CARE believes it's 9%, government is saying 10.5%, but growth over 2019-20 will be not more than 2.5%.
Yeah.
So it's going to be very meager growth in this year. So I look at this year as a period in which we just about managed to get up. And all the problems which are there in 2019-20, which is low level of consumption going back to job creation, low level of investment going back to saying there is surplus capacity in Indian industry, limited expenditure going on in infrastructure, especially from the private sector. I think those problems continue to haunt us. So the way I look at it is that we are hopefully, the worst is over. And as we go into 22-23, we are better positioned to go back towards the normal. We would need to see a lot of affirmative action coming from the government in terms of spending, private sector getting a lot of confidence in terms of investing, which means that we also need to have the banking sector willing to lend. And I think the recent developments which took place yesterday may not sound a very good music for the banking sector.
Yeah.
So keeping these things in mind, I think if we get everything sorted out, I think 22-23 will be the year of consolidation. And from 23-24, I would be seeing real growth taking place, provided, of course, nothing untoward takes place.
You know, I'm going to take off from that as I end the show and thank all of you for joining us, as well as all of those who came into the studio today. After a huge knock, like the way we have had, all of us individually had, the world's had, the first step is to at least get up and dust it off and then move forward. So this is the time that we have gotten up. We're back on our feet, and then it may take a little time for us to start sprinting again and running again, but at least we've taken that first step. And with that, I want to wish all of you joining us a very, very happy festive season.